It has been a tough 4 months for borrowers who have had to contend with higher interest rates on their loans. Interest rates that have soared above 25%. Beneath that trend has been a dramatic rise in yields on government treasury bills, which are key determinant factors of lending rates to levels above 20%. A development that compelled commercial banks to lend at even higher interest rates.
If we try to lend you at a lower rate than 22. What we are saying is that you can do arbitrage. You can just take that money and make us a fool of ourselves, and instead of us buying treasury bills, it's you who is buying the treasury bills.
But now borrowers may soon have a sigh of relief in the wake of the recent decline in treasury bill rates. The yield on the 91-day treasury bill rate has so far seen the biggest decline of nearly 6 percentage points, plummeting to 13.76% this week from 19.47% the previous week. The 182-day treasury bill rates have also dropped from 21% last week to 16.49% this week, while rates on the 364-day treasury bills have dropped from 21% last week to 17.1% this week.
Government has taken a decision not to borrow at such high interest rates.
According to the Kenya Bankers Association chairman Joshua Oigara, who's also the group chief executive of the Kenya Commercial Bank, this latest development has set the stage for a return to lower lending rates.
The drop in the rates is extremely positive news, the treasury bill rates, whether it's the 91 days, the 365 days and 182 days. And what I do expect personally is that for customers, borrowers, we expect that their interest rates, what they're borrowing at today, will actually start being adjusted from all the member banks from the coming week.
We were always concerned that the commercial bank raised interest rates too quickly. So we are going to engage the commercial banks very intensely and see that they lower their lending rates to wananchi just as quickly as they went up. There's no reason why they cannot lower those rates as quickly as they went up.
The decline in T-bill rates is also a sign of increased liquidity in the money markets, which is expected to gradually spur interest rates downwards.
The supply of borrowing to the government has been quite significant. In fact, just to give you an example, yesterday when we sought to borrow 4 billion from the market supplied to us 46 billion.
The mechanisms and the basis of our economy are very strong. Yeah, we see today that there is a dramatic response on the pricing of credits for which the government is borrowing, and therefore the banks definitely will follow suit in the lending.
To bring down the cost of money, the Central Bank of Kenya has been injecting fresh liquidity into the money markets, with its latest intervention being its injection of 6 billion shillings on Friday. And with treasury bills now on the decline, there is a glimmer of hope for a respite on the cost of borrowing from commercial banks. Terry Ann Chebet for Citizen Weekend.